Oracle just reported its earnings for the first quarter of fiscal year 2026. At first glance, the headline numbers don't look spectacular. Revenue slightly missed expectations, and earnings per share came in just a cent below Wall Street's forecast. But beneath the surface, Oracle is in the middle of one of the biggest transformations in its 47-year history. And this transformation has everything to do with AI, artificial intelligence. Today, I'm going to break down Oracle's latest earnings call, what the CEO Safra Catz and founder Larry Ellison said, and why Oracle is betting big on becoming the AI backbone of the enterprise world. By the end of this video, you'll not only understand Oracle's business today, but also why analysts are calling this an industry-defining moment. So let's dive in. Let's start with the financial results quickly. Oracle posted revenue of $14.93 billion this quarter. Analysts expected $15.03 billion, so a slight miss. Earnings per share came in at $1.47, just a cent shy of expectations. On the surface, nothing exciting, right? But here's the twist. Oracle's cloud business is where all the action is. Cloud revenue jumped 27% year over year to $7.2 billion. Cloud infrastructure, Oracle's version of AWS or Azure, surged 54%. Cloud database services were up 32%. And their multi-cloud database, the ability to run Oracle databases inside AWS, Azure, and Google Cloud, grew a staggering 1,529%. That's not a typo. Over 1,500% growth. This shows Oracle is no longer just the old school database company. It's becoming a central player in the AI arms race. Now, here's where it gets really interesting. CEO Safra Catz dropped a bombshell. Oracle has signed major cloud contracts with basically the who's who of AI. These deals have created something called RPOs, remaining performance obligations. Think of RPOs like Oracle's backlog of future contracts. Money that's basically locked in but not yet recognized as revenue. That backlog now sits at $455 billion. Yes, nearly $500 billion. That's up more than 350% compared to last year. This backlog is the strongest signal yet that AI workloads are rushing into Oracle Cloud. And why Oracle? Larry Ellison explained it in simple terms. Oracle is building gigawatt-scale data centers optimized for AI training. These are massive GPU clusters, faster and cheaper than what competitors can offer. Imagine training AI models like building rocket ships. You need the most powerful engines possible. Oracle claims it builds those engines cheaper and faster than anyone else. That's why companies like OpenAI and Meta are choosing them. Larry Ellison made a fascinating point in this call that most investors miss. Training AI models is just the beginning. That's like teaching the AI how to think. But the real money comes from inferencing, when millions of businesses actually use those AI models to run their daily operations. Think about it. Running robotic factories, diagnosing diseases with AI, automating financial reports, even running governments. That's all AI inferencing. And Ellison says the inferencing market will be much larger than the training market. Here's Oracle's advantage. They're the world's largest custodian of enterprise data, the sensitive, financial, healthcare, and operational data that companies need to run AI on. Oracle has introduced a new AI database that can vectorize all that data, basically converting it into a format AI models like ChatGPT or Google Gemini can understand. So when a company wants to ask, how will new tariffs affect my revenue next quarter? Oracle's AI database can combine their private data with public data and give a direct, secure answer. That's a unique advantage. And Ellison basically challenged the entire industry. Who else can do this besides Oracle? Now, let's talk money again. Oracle is spending like crazy to build this AI future. This year alone, CapEx, capital expenditure, will be about $35 billion. But Safra Catz explained that this spending isn't on buildings or land. It's mostly on GPU, servers, and networking equipment that generate revenue almost immediately. For example, Oracle just delivered a massive data haul to a customer. Normally, acceptance testing could take months, but in this case, just 1 week before the customer was already paying for it. So while free cash flow is negative right now, Oracle is essentially laying tracks in front of a speeding train, deploying capacity just in time to meet insatiable demand. Another piece that stood out was Oracle's cloud flexibility. Unlike AWS or Google Cloud, Oracle can deliver public cloud, dedicated regions, or even cloud at customer. a private version of the Oracle Cloud that sits entirely inside a company's own walls. Larry Ellison mentioned something called Butterfly, a full Oracle Cloud environment compressed into just 3 racks of hardware, costing about $6 million. That's an insanely low entry price compared to what competitors charge, and it's attracting big enterprises that don't want to share cloud infrastructure with anyone else. Beyond infrastructure, Oracle is also reimagining applications. Larry Ellison said Oracle is using AI application generators to build new apps. Instead of armies of developers coding manually, AI now writes the applications, which are basically just a collection of AI agents linked by workflows. And here's the kicker. Oracle doesn't charge extra for AI inside these apps. The AI is the application. This makes Oracle's ERP, CRM, and industry-specific apps more powerful and potentially stickier than competitors like Workday or ServiceNow. In fact, Oracle is betting that the combination of AI-driven apps, AI-powered databases, and AI-optimized infrastructure will create a moat that competitors simply can't match. So, where does this leave us? Oracle's earnings miss might have grabbed headlines, but the real story is that Oracle is positioning itself as the AI operating system for enterprises. The company expects Oracle Cloud Infrastructure revenue to grow 77% this year and reach $144 billion annually within 5 years. If that plays out, Oracle could leapfrog into the top tier of cloud providers, challenging AWS, Microsoft, and Google directly. Ellison himself called this moment a tsunami approaching the computer industry. And for once, that doesn't sound like hype. The numbers back it up. So here's the bottom line. Oracle isn't just another cloud company. It's quietly becoming the backbone of AI for enterprises, with contracts locked in, infrastructure scaling, and a unique database strategy that could define the next decade of enterprise computing. If you're an investor, Oracle is no longer a sleepy database stock. It's a front row player in the AI revolution. And if you're just someone curious about where AI is headed, Oracle's story shows that the future isn't just about fancy AI models, it's about who owns the infrastructure, the data, and the tools that enterprises trust. If you found this breakdown useful, hit that like button, subscribe for more deep dives on earnings calls and AI investing, and let me know in the comments. Do you think Oracle can actually catch up to AWS and Azure, or is this hype that won't last? Thanks for watching, and I'll see you in the next one.